Alright everyone, welcome back to the channel for another update on Bitcoin. In today's episode, the macro perspective, we're going to be talking about, you guessed it, how Bitcoin is performing to the mid to higher timeframes. Earlier on today, I did make a video, Bitcoin Battle of Divergences. This was specifically focused on lower timeframes. We were talking about 1 hourly, 4 hourly timeframes, lower timeframe bullish divergence that was playing out, and we looked at news updates and the lower time frame momentum indicators. So in this episode, I'm not even going to look at a time frame lower than the 1 daily. With that being said, let's jump right into today's video. So right off the back, as I'm sure all of you have been realizing, Bitcoin has been having a massive move back up to the upside. Now, since this massive move, we have come back to retest a vital area of support, and this bull flag definitely looks like it wants to start pushing back to the upside. I'm only joking, of course. This is on the inverse scale. I even changed the colors on this, so if you were bullish over on this chart that I was just showing you, then you should keep the same energy as we do flip back to reality. Let me change the colors of these back before this haunts me for the rest of my life. But once again, this is what I was showing you. We are in a massive bull flag to the upside on the inverse chart, meaning that if you were bullish on that chart, you should be bearish on this chart. We are in a massive bear flag to the downside, and nothing has changed in the macro perspective. So I am going to keep this video relatively quick. If I do remove this before everything changes back over to those candlesticks on the inverse scale and haunts me for the rest of my life, let's move on to the oscillators. So starting off on the MACD, as you can see in the past couple of weeks, the MACD has been subsiding because of the bullish momentum. However, you can still see it does this many times before it gears up for a dead cat bounce and another massive leg to the downside. I really don't think we can look at the weekly MACD right now and say that this is at all bullish. Basically, since this started topping out and running out of momentum, we have a high up here for the bulls, we have a lower low down here for the bears, and then as you can see, the lows are getting lower for the bears, which is good for the bears because the lower this goes on the MACD, then the stronger the bears are. And as you can see, the lower the swings to the upside get in favor of the bulls, and as you can imagine, the bulls are running out of momentum to the downside, and to the downside the bears are gaining momentum. So over on the MACD, it does seem very black and white that at this moment in time the bottom may be in, but if you do wait for a bullish flip, if you do wait for more bullish momentum to come in over on these momentum indicators, you're not going to be missing too much from the bottom. Now, if we do look at the squeeze bomb, you can also see the squeeze bomb, unlike the MACD, takes a lot more momentum. It takes more time pushing above previous resistances, previous Fibonacci's, previous moving averages to switch from a bearish bias over to a bullish bias, and subsequently you can see even with the bounce in the past couple of days, and I was about to say the past couple of weeks, but I mean really, we've really only been moving up since the 30th of June, so not even 2 weeks so far. 1, 2, 3, 4, 5, 6, 7, 8, 9 days we've been moving to the upside, from 18,600 all the way up to 22,500. Moon boys over on crypto Twitter are getting out of bed for the move up to 22,500. Now, it's funny because if 1 to 2 months ago you said we would be bouncing up to 22,500 and you would be bullish, you would have been clowned. People would have told you that you would be a permabull, or you would have been fudding, because we did this exact move down here. We took a massive capitulation to the downside, we crabbed sideways for a prolonged period in time until we took another leg back down, made that higher low, and then out of this bearish formation, I have this over on this chart, we were basically in the exact same pattern. We were in a massive bearish pennant, we broke to the upside of this, we had a fake out, and then we pinged all the way back down to the downside. What is another way of drawing this pattern? When you do encompass the breakout to the upside, you can basically just see that this was somewhat of a bear flag. If we remove the pole, you can argue that this is a megaphone. That's the word I'm looking for. This is a megaphone that broke to the downside. Nonetheless, we can just call this a massive bear flag that capitulated to the downside. And yes, this is the same thing over here, where if we do look at this right now, this is a, once again, if I can find this, where has it gone? I believe it's over here. Okay, now I've probably lost it forever now, but nonetheless, we were in a massive, oh yeah, I removed it from the chart, so it doesn't matter anymore, but as we talked about before, we were in a massive bear flag to the downside, and right now we have broken out of a bearish pennant, just like we broke out of a bearish pennant right over here, but we were still forming a larger bear flag before we did break to the downside. So once again, definitely need to put things into perspective. Over on the daily time frame, the RSI is heading up very strongly, up at 49. Lower time frames, it is still very oversold, and it can definitely have a bounce, but I do not want to say, in my opinion, that we are going to be breaking bullish until we invalidate this hidden bearish divergence. This is the most important indicator, in my opinion, that we have playing out on the charts right now, because not only if we draw this out something like this, or if we draw it out flat, that this would basically be the bear flag that we're consolidating in right now, the price target that we need to break out of this bear flag is the same price target as this hidden bearish divergence, and this hidden bearish divergence is definitely massive. Now, I talked about this in depth earlier in the Battle of Divergences video, so I'm really only going to spend 20 seconds over on this chart before I do dip, but as you can see, hidden bearish divergence is where you are bearishly diverging from the RSI, and this is when you have the price action have a high, lower high, and you have the oscillator have a high, higher high, and higher high. So nothing has changed from this. Like I said, this higher time frame video will be relatively quick because nothing has changed in that regard. I have also recorded a separate update on the Bitcoin dominance, so if you do want my full thoughts on the dominance, then be sure to go check that out. But the dominance is having a very healthy bounce right now. On the weekly time frame, it's only just bounced from the heart line, so I really do think the dominance is going to be getting ready for that next massive leg to the upside. We also talked about in the earlier video, in the shorter time frame Bitcoin Battle of Divergences, how the payrolls have increased 322,000 more payroll increases over in June, and in my opinion, this is only short-term bullish. I do think this is kind of a bullshit metric, saying that average hourly earnings are up 5.1%, when you look at the reported CPI, the reported inflation, it's 8.6%. So even if we're going on the reported inflation, if you've only got a 5% increase in your wages, but inflation is like 8.6%, then that means your real wages are going down. And when they say 8.6% inflation, it means 30% or more inflation. There's no way that you double the money supply over a span of 2 years and you don't get more than 30% inflation in goods and services. So once again, if your wages are only up 5% and inflation is at 30%, that means your real wages are down 25%. Real wages are a concept in economics, basically saying, it doesn't matter what your increase in your wages are in monetary terms. If you've got a 10% increase in your wages, but inflation is 50% and you have to pay 50% more for your goods, that same paycheck is not buying what it bought the previous year. So subsequently, real wages are down, and I do just think some of these metrics are kind of just a little bit of hopium that the Fed is trying to push out before the next GDP growth report. Now, honestly, I think the longer we do this, the longer we kick the can down the road. And if you're like me, you kind of want us to have negative GDP growth, so we have a confirmed recession. That will really be the kick up the Fed's ass to sort out the economy, at least in the short term. There's no way that you can taper a Ponzi, so there's no way that the Fed is going to be able to backpedal from everything they've done since the dollar has been coming out. The dollar is eventually going to go to zero at some point in time, just like every single fiat currency used before then. If you've done a ton of research on, the history of fiat currencies, even if you look at the strongest currencies and the strongest empires like Rome, they used coin clipping. They had, a certain weight in gold coins that they used as their currency, and they got, metal clippers and clipped off some of that gold coin, so the weight was less, and if you melted the gold down, you would obviously have less gold. And they constantly clipped coins until the value of that gold coin was absolutely nothing. They spread their empire out thin because of the inflation of their currency, and subsequently, when when invaders came in, they were so weak that they just got taken over. So a lot of people say, you know, Rome was taken over by this person and this person. Rome defeated themselves before any invaders ever did. And this is exactly what we're doing with the US currency. Other currencies, other fiat currencies, CBDCs are going to come out. They are going to be stronger than the dollar. Eventually, we're not going to be on the dollar standard. If you don't believe me, go look at the history of every single fiat currency. They do not last more than 100 years. 100 years is the average lifespan, and the dollar is tick-tocking on that time. I do not think it's going to be out for another 20 years or so. So that being said, the longer we do kick this down the road, the longer we bounce for Bitcoin, the longer we head to the upside, it's just going to mean the more brutal the next move back down to the downside is. And why does this make sense? Well, when you have a massive break to the downside, as you can see, you know, your oscillators get completely beat down. And over here, we saw that the relative strength index came all the way down to 24. So if we just capitulated a little bit further, you know, the bottom could have been in and we could have just fully reset this. But what we did is we headed back to the upside. We reset our oscillators. So when we did have the next move back down to the downside, this inflection point was over here. We were able to push down even further from here. And as you can see, the RSI really didn't even dip too much lower than it did previously. So every single time we have these dead cat bounces, we elongate these, you know, we enter a crab market to the side for a couple of months, enter a crab market to the side, you know, have a fake out to the upside, M out and break down, have a fake out to the upside, M out and break down. The longer we're kicking the can down the road, and especially, I think everyone should be hoping that we have negative GDP growth coming in the next 3 weeks, because if we have positive to neutral GDP growth, Bitcoin could possibly have a massive bounce, and then that just means the next time we have another leg back to the downside, it's just going to be even more pain. The bear market is just going to get dragged on and on and on. The quicker we find our bear market lows, the quicker we can go up and make new all-time highs in a new bull market. Once again, the longer we kick the can down the road, the longer the pain is going to drag out for. So momentum indicators on the higher time frames are still calling for a move back down to the downside. Like I said, with the RSI, it does look like it wants to turn up a tiny bit, which is going to be bad for the Bitcoin price in the long term. You know, the reports that we just went through a second ago, those are going to be bad for the economy and Bitcoin in the mid to long term. Like I said, the longer we kick the can down the road, the worse it's going to be. So once again, the invalidation point where I do have to break short-term bullish would be after we do take out the top of this hidden bullish divergence. And by take out the top, I mean we would need to break above 23,400. We need to come back and back test it and then break above the previous invalidation zone. You know, this is obviously hypothetical. You know, we could do something like this before we could come back down, or we could just lollygag before the next move up. But until something like this happens, I remain in my bearish bias. This is a no trade zone for me. Higher time frames, nothing has changed. If we do break over the top of this though, 23,400, I will give you my price targets. There is a lot of volume traded around about these regions, so I could be expecting Bitcoin to bounce between the ranges of 24,600, potentially even as high as 32,500, but only if we get positive GDP growth. If that does not happen, then this will not happen. And do I think we're going to bounce this high? No. If I'm being honest, I think this is the most likely range. To be honest, I think this is the most likely range that we'd be moving up to. I really don't see us moving back too much higher than maybe 28,000, round about this range between, once again, 24,500 and 28,000 is where I would start offloading some of the BTC that I've been accumulating below 25,000. So, you know, once again, while I do think the bottom is not in, while I do think that we are going lower, I have been saying on my channel, if you are a seasoned veteran, that I have been DCAing very heavily at every single $1,000 increment down from 25,000, meaning I had buy orders at 25, 24, down here at 23. You get the gist of this. I won't go all the way down. And I also had buy orders that got hit at 18,000. Obviously we came down to 17,500, so my buy orders at 17,000 didn't unfortunately get hit, but I have I have been buying between the ranges of 25,000 and 18,000, and I'm telling you, if we start to move back up to the upside, if we start to come and break above 24,600, 25, 26, 27,000, I am going to be dynamically DCAing back out of Bitcoin and coming back into not stable coins, because I don't trust stable coins. I've been very adamant on my channel about this. I really don't recommend anyone to enter stable coins. I am entering fiat, and with that fiat I will be re-entering the market when I do believe things are safe. Before we do wrap up the video, I would also like to say another reason why we could potentially be bouncing is because Bitcoin has been lollygagging at its previous all-time high. The dollar in the higher time frames is still extremely strong right now, so in my opinion, while the dollar's going up, this is just degenerates buying the dip. The stock market as well is bouncing up into a major area of resistance. We've talked about these before. Every time the dollar, or not the dollar, sorry, every time the stock market gets above this first thinner yellow line, we come up and we lollygag for a couple of weeks into the top of this resistance, break down. Once again, we break above, lollygag in the top of this resistance, break down. And the fact that we've done this again makes me think that we could definitely get another week or two of continuation up to maybe about 393 over on the stock market. Maybe we won't go that high. What I do know is that if you are buying in these regions, it is, in my opinion, like buying here and like buying here. So I'm personally not buying any Bitcoin, not buying any stocks, not buying any altcoins at this moment in time. I'm waiting for lower price targets. I do not think the bottom is in, but my short-term bullish bias will have to flip at 23,400. Will I be buying at 23,400? Absolutely not. Will I be selling as we push above 24,500, 25, 26, 27, 28? Yes, I will. Once again, I will be looking to buy when I think the bottom is in closer around the ranges of 16,500 down to 14,000. That's all I've got for you today, my friends. Hope you found some value in today's content. And as always, cowboy out. Peace.